hate this question, but they're going to make me ask it of you anyway. I can't look out past 3 months, call it 6 months, but I'm going to have to ask you to look out 3 to 5 years because you're an equity investor. You're a long-term equity investor for one of the largest pension funds in the land. And how do you guys stick with your conviction calls over the medium and long term for a 3 to 5 year period in international equities with all of the FX risk, all of the bottom-up fundamental risk that goes hand in hand? What keeps you up at night?
So one way to basically mitigate your risk over a 3 to 5 year time horizon as a long-only investor is to invest in quality companies. So we could argue about what is quality, but I'd leave you with this. McKinsey did a study on return on capital by markets, large companies in the United States, Europe, elsewhere. The European return on equity was 14% versus 18% in the United States. That's without the benefit of a large tech industry and with very high electricity costs, right? Because of Ukraine, which are getting better as more LNG is arriving into Europe. But 14% is a good starting point. But the quality companies are basically where you would be more over-indexed. So Atlas Copco, as an example, 49 to 55% recurring revenue, large aftermarket, right? So that's where you can sleep better at night. In terms of where are the risks over the next 3 to 5 years, well, the thing that struck me also is that there was a study that said, where are all the international academic journals in terms of peer-reviewed articles? Where are they coming out from? Well, it turns out 80% of them most of them are in Europe, but the Europeans only have 5% of the patents. To the United States, 15% in 2023-24, and 80% for China. So Europe's got a problem in terms of commercializing its tech. The VC industry is only a quarter of the size of the United States. Private equity is only 1/2 the size. So this is where capital formation, 80% of European corporates rely on the banks. They don't rely on capital markets. So that's part of the Draghi report, try to get more integration of Europe, more capital market development. And so, but what I'm excited about for my portfolio over the next 3 to 5 years outside of these quality companies is the pick and shovels for AI. So that's your Schneider, Legrand, Prismian, ABB, all these kinds of companies that are seeing very high order books right now.
Yep.
And that is what also lets you sleep well at night, knowing that these companies that you have pretty large order books.